Boston. This is News Center 5 at 5.
Breaking news from Wall Street. The surge bringing a sigh of relief. Plus, the Wall Street jitters forcing tough choices for many people.
But we have breaking news of the Wall Street rebound. What a day. Stocks surging. They plummet to the top. They then surge again and finally rise. And so the bottom line is, after this, surging 429 points, this roller coaster comes down fresh off the heels of one of the Dow's worst performances in years.
It has been a volatile day. As you look at this calendar, 634 points down, 513 points down. It gained 61 on Friday. It continues to change, and today it was up again. Nicole Killian begins our team coverage with the steps being taken right now to boost the economy.
Despite a late rally, it wasn't the news Wall Street wanted to hear. The Dow dived earlier in the day after a statement from the Federal Reserve. It noted economic growth has been considerably slower than expected and warned of a slower pace of recovery in the coming months.
That has to be of concern to the Fed that the United States economy is losing momentum.
Hoping to give the economy a boost, the Fed said it will keep interest rates at extremely low levels through mid-2013. But some economic experts say it should do more.
The Federal Reserve Board should do everything it can to speed up growth. The issue right now is not inflation. The issue is that we have had and expect to have very high unemployment.
The Fed pledged more help down the road if needed. Its dim assessment coming days after Standard & Poor's downgraded the U.S.'s credit rating, sending markets here and abroad into panic mode.
You do have a sort of crisis of confidence going on, where you have people looking at the decline in the markets combined with their housing values, high unemployment, and people just don't have a lot of confidence in this economy right now.
But Cato Institute's Michael Tanner says it's best for concerned investors to ride it out.
The fact is, if you have a 401k or you're the average person with investments out there, the volatility is scary, but doesn't mean a lot. Put your money in, keep it in over the long run.
Even though the Dow ended the day up 4%, it still has lost about 15% of its value since mid-July. In Washington, Nicole Killian, News Center 5.
And that's the key point. We'll take the 600-plus point loss yesterday, the 400-plus point gain today. It kind of makes you confused. So joining us to make sense of the market mess is Michael Feiner, CEO of Major League Investments.
Michael, let's start with, we've seen some wild swings, just what Eddie was talking about. So my questions to you are, why are we seeing these swings, and are you surprised by today's upward movement?
I am not surprised by today's upward movement. Today, when we woke up, we expected everyone, whether professional or individual investor, they expected a mammoth decline in the market. When that didn't happen and the sellers couldn't push things south, even with the Federal Reserve sort of tepid news, the buyers came in aggressively, they bought stock, and they finally made the sellers surrender.
So the next logical question is, are we out of the woods? Was this a 24-hour fire, or do we have more reason to be concerned?
No, I think that the sellers capitulated today, and we are temporarily out of the woods. We need to take a look at many macro trends, including some of the issues with the government, but for the short run, today was the capitulation of the sellers, and I think that people can reevaluate their portfolios going forward and possibly take a look at buying things for the future.
The government's, the Fed Reserve's decision to keep interest rates the same until 2013, after the presidential election, good thing, bad thing?
I think that's a good thing, because the markets, the one thing they do not like is uncertainty. And today the Federal Reserve removed uncertainty from the markets. Although their statement wasn't encouraging per se, it wasn't negative, and it removed that uncertainty. And that is fantastic for the markets, because people can plan going forward.
Michael Feiner of Major League Investments, thank you for your insights.
Appreciate it. Well, while the stock market went higher, oil kept going lower. The price of a barrel of crude fell $2 today to $79.30, and that's the lowest it's been since last September.